Welcome everybody. My name is Alex Hambley. I'm CIO of VinaCapital, and today we're bringing to you our 2Q webinar series where we are going to spend some time thinking about Vietnam, what's going on in the country, and talking to some of the funds that we manage. Based on some feedback from our viewers, we've changed it around slightly this time. So we're running a series of 10-minute fireside chats with our chief economist, our head of research, and for the purposes of this chat, I've invited Mike Nguyen to join us, who is the portfolio manager for VVF, the VinaCapital Vietnam Fund.
Yes.
Mike, welcome.
Thank you.
Thank you for joining us. Perhaps we should start, just remind us about VVF and its long-term performance.
Sure. Thanks, Alex, for the introduction. Our UCITS fund, actually, this month is our 10-year anniversary for the fund. So if you look at our performance over the last 10 years, we think we did a good job. For every $1 invested in the fund, we generate about $1.6 in return. This far outperformed the VN index, which gives you only 90 cents. On the shorter 5 years basis, the fund generated annualized return of 15% compared to VN index of only 8%. So the outperformance was very clear. The return numbers reflect our bottom-up investment strategy. We focus on high-quality companies that could deliver high sustainable return on capital and high EPS growth, normally more than 10%. It also reflects our investment discipline when navigating through market volatility.
Okay, Mike, thanks for that. And I think we get a feel for the long-term performance of the fund, but this is a quarterly update. So perhaps you could give us a sense of more recent performance over the last quarter or the last 6 months.
Sure. If we see the first half of the year, it was a volatile period. If you see the return for the Vietnam market...
Sorry, and that volatility was driven a lot by tariffs, I'm assuming.
The volatility was driven by tariff mainly in April, as you have seen. But if you look deeper into Vietnam's VN index numbers, the performance was great, 12.3%. The number is driven by a group of companies under one private conglomerate, which account for nearly 15% of the index. And there are 4 companies under that group that generated return of 50 to 150% for the stock in those groups. We did not have exposure to that group. The reason is, under our investment criteria, we are very skeptical on the non-arm's length transaction among the companies under that group between both the listed and the unlisted entities. And it's very difficult to evaluate on independent valuation of each company. So we stay away from that group of companies. That explains our underperformance for the first half of the year. When President Trump announced the tariff on 2nd of April, the market corrected sharply. But we did not follow the crowd selling the trade-related names. We didn't sell our port, we didn't sell our Pangasius exporter stocks. The reason is, when we come down to the fundamentals, we see the direct impact of tariff on those companies is quite limited. It may be because of the difficulty in changing the supply chain, or the companies can pass the cost increase to consumers because the cost increase is very small. So we didn't change our position. So far, that decision was kind of right for us because the stock price of most of the companies have returned to the pre-tariff level. We think that the important thing for the investor is to focus on the operation of the companies rather than be spooked by the fear of sentiment of investors.
So it's good that you held your discipline and
yes,
you stuck
that's
to,
right.
to your fundamental beliefs in the company.
That's right. I think investment discipline is the key.
Okay. So I think what you touched on there was a little bit around what you don't invest in.
Yep.
Perhaps you could share with all of us what it is you do invest in and what a company needs to look like for you to think about it to be part of your portfolio construction.
Sure. Our investment philosophy, we want to invest in company with high return on capital, and the company can retain capital to grow. So high EPS growth. We want to invest in companies that we can understand. If you look at our portfolio average return equity is around 18%. This is higher than the market of around 14%. And on 3-year basis, the EPS growth of our portfolio is more than 15% on annualized basis for the last 3 years. While on the market, you can have only 11%. So currently, we have a portfolio with very high EPS growth and companies that are very profitable in terms of return on capital. That drives our investment philosophy. And of course, we want to invest in company that is easier to understand for us.
Absolutely, yeah.
And good management. But the quantitative criteria is high return on capital and high EPS growth.
Okay. Thank you for that. As I explained earlier, this is one in a series of webinars, and we've previously heard from Mike Kokolari, our chief economist, who's painted broadly a positive picture of Vietnam and the macro picture, and also Lin View, our head of research, who's talked a little bit about the stock markets and how she's thinking about that. What are your thoughts for the fund moving forward?
We totally agree with Mike Kokolari and Lin's positive view on the economy. We think for the macro economy, there are 3 important drivers. Number 1 is the easing monetary policy, and that would lead to high credit growth. Secondly, we have high fiscal spending by the government, and the government is having very low debt level. And the third is government support for the private sector. Based on these drivers, we think the bank will be the main beneficiary because banks is a leverage play on the economy. And currently, we have banking sector as the biggest sector for our portfolio. Besides the bank, we also have high weight on consumer and logistics sector. On consumer sectors, we expect a recovery on consumer spending as well as normalization of margin. On logistics sector, our main exposure is mainly the port operator. And for the port, we continue to see high throughput volume, and we expect terminal handling fee to increase by the end of this year. One sector that we are bullish on is real estate. On real estate, we have seen the market undersupply for many years, and mortgage rate has stayed at fairly low level. So we are positive on that. But we are a bit skeptical on the valuations of real estate developers. And we are afraid of potential dilution, of which the real estate developer needs to raise to fund the expansion.
How does that work from a fund perspective?
We do not invest in real estate developers because of the market valuation. But we invest indirectly via the banks.
Okay.
We choose the banks with high mortgage lending. So what we see in the bank is the valuations are very cheap. Only 1 to 1.5 times price to book. And the bank delivers very good return, 15 to 20% return equity. We think it's excellent. And it's a better alternative to invest into the banks rather than the real estate market itself. Okay. On the financial sector, besides the banks, we also took a big position in the brokerage sector during the market correction in April. What we see from the brokerage sector is the earnings should be intact because liquidity on the market has been increasing consistently. And we see the potential of Vietnam to be upgraded to emerging market by the end of this year. So we think it's a very important catalyst for the brokerage sector as well as the market.
And how have they performed since you've bought them?
The performance has been great. Yes. So the broker have given us around 30% return.
Very good.
Over the last 2 months.
Yeah.
But for the markets as a whole, we think the valuations are still very cheap. You see the market is trading at around 11 times price earning only. why the return EPS growth for the year is still very good, more than 10%. And we expect the macro economy to drive the earnings of local corporates to be even higher.
Okay, so broadly very positive. You're investing against this positive backdrop.
Sure.
You're very clear what it is you want to invest into. I think if we try and pull this chat together, and maybe just to summarise, perhaps for our viewers, maybe if there are three things you would like them to remember about VVF and you and how it's being managed, what would those three things be?
Sure. If you see the market as a whole, high earnings and low multiples, so our fund even have higher EPS growth and lower multiple. So we have the good thing on both ways. But for the characters of the fund, first we run a index agnostic fund.
Yes.
So we don't follow the index. So sometimes short-term performance may deviate from the market, but we are fine with that. We have high conviction in our earnings, and we believe our companies can generate high return in the long run. So that's number one. Number two is we run a very concentrated fund. We hold only about 20 or 25 positions, very concentrated for a UCITS fund. Our top 10 account for around 60% of the fund. So we follow the company that we know well, and we follow the company that can meet our investment criteria. We don't think many companies on the market can meet our investment criteria. High sustainable return on capital and high EPS growth. That's number two. Number three, we prefer the management of the company to focus on improving the core business rather than be detracted by the stock price. So if you see, there are a lot of noise in the market, like the tariff, but it doesn't impact the company. What the company needs to focus on is how they can improve the value chain.
Okay.
How they can embrace new opportunities, such as digital transformation or the new reforming phase of the economy. They can get on the board of the economy going forward. That is better. So we prefer management to have focus on operation.
Okay. So long-term performance,
high
conviction, quality management teams.
That's right.
So I hope that's been useful for people. And I think for anyone who's interested in accessing the fund, how can they go about that?
Sure. There are many ways you can access our fund. Our fund is registered with most trading platform, global trading platform, or you can go directly to our administrator of the fund.
Okay.
That should be easy. Or you can go to the private bankers. They know how to navigate the subscription for the fund.
Okay. Mike, thanks for your time.
Thank you.
Appreciate it. Thank you very much for joining us.